Puerto Rico has become a magnet for crypto entrepreneurs in search of tax breaks and a picturesque environment. Bitcoin has made its own fair share of millionaires, and with the recent bull rally, there is no doubt that this number went up drastically. This has led to a number of issues of investors who have made their money off the digital asset, the main one being taxes. A lot of these millionaires have begun to flee to places with less strict tax laws, as well as better weather conditions. As CNBC reported, the island offers huge tax breaks to people who spend at least 183 days there every year, making it highly popular among the crypto contingent. According to Act 60, bona fide residents do not have to pay taxes on U.S. source capital gains if they bought assets after establishing residency there. The Tax Incentive Code, known as Act 60, provides tax exemptions to businesses and investors that relocate to or are established in Puerto Rico. The incentives are particularly attractive to U.S. citizens who move to Puerto Rico because they do not need a residency permit. Their Puerto Rico income is exempt from U.S. federal and state income taxes, and they get to keep benefits such as Medicare and Social Security. Furthermore, the Puerto Rico tax code mirrors the U.S. Internal Revenue Code, making the transition much easier for those who become bona fide residents of Puerto Rico. The U.S. Tax Code, Section 933, allows a bona fide resident of Puerto Rico to exclude Puerto Rico source income from his or her U.S. gross income for U.S. tax purposes. Residents of Puerto Rico do not have to file a U.S. federal income tax return if all of their income is sourced within Puerto Rico. If income was received from sources outside of Puerto Rico, a U.S. federal tax return must be filed if the amount of income earned outside of Puerto Rico is more than the taxpayer's filing threshold. Any U.S. source income is still subject to U.S. taxes at the regular rate, but Puerto Rico source income for an individual may be taxed at 0% for federal and Puerto Rico purposes. Puerto Rico sourced income includes interest and dividends from sources in Puerto Rico. Additionally, bona fide residents of Puerto Rico are not subject to tax on U.S. source capital gains if they acquired the assets after establishing residency. Taxpayers establishing bona fide residency in Puerto Rico will need to maintain the appropriate record-keeping and obtain appropriate tax advice in order to properly track Puerto Rico source and U.S. source incomes, as the taxpayers may have income sourced from both locations, which will ultimately have different reporting requirements. This law prompted crypto investor David Johnston to move his company and his family to Puerto Rico in March 2021, CNBC reported. "That's where all my friends are. I don't have one friend left in New York, and maybe the pandemic accelerated this, but every single one of them has moved to Puerto Rico," he told the outlet. Over the past few years, Puerto Rico has been recovering from the devastation of Hurricane Maria, which hit in 2017. Insiders Katie Warren wrote in 2020 that the island's tourism industry, which accounted for 6.5% of its GDP, was decimated, and that once popular areas became deserted. But the island has since rebounded. In July 2021, tourism organization Discover Puerto Rico reported that revenue from visitor spending and taxes were at an all-time high. In a press release, Discover Puerto Rico's CEO said, "Despite facing many challenges stemming from the pandemic, the tourism community in Puerto Rico is once again showing the world its strength and resiliency. We are achieving a high rate of return on our marketing, sales and promotional investments. Crypto-friendly policies are being implemented elsewhere too." Recently, a non-profit in Northwest Arkansas said it was offering $10,000 worth of free Bitcoin to attract newcomers to the state. The offer includes a free bike and has garnered more than 35,000 applicants so far. Another incentive for businessmen who establish themselves on the island is that their companies do not pay the 21% federal corporate tax that is charged to businesses on the mainland, nor the state taxes that are variable. In Puerto Rico, this tax is only 4% for services provided outside the island. However, to obtain these tax benefits, companies must be fully established on the island, warns CPA Shehan Chandrasekara, a specialist in cryptocurrency businesses. That's the part that people aren't talking about, Chandrasekara said. Crypto entrepreneurs must first apply for Puerto Rican residency to enjoy these benefits. Some investors have chosen to transfer their profits to the island. They invest and after obtaining residency, they sell their stake and then buy it back as if it were a new asset. In this way they prevent profits from the US from incurring accounting problems. But what do the locals think? Puerto Rican locals are not exactly happy about seeing the move to the tropical paradise. This has less to do with the people coming in and more to do with the fact that the locals themselves do not qualify for the tax exemptions that these non-Puerto Ricans enjoy. Residents like Johnson who move in from other American states after making their millions with Bitcoin and crypto do not have to pay capital gains on their earnings. However, Puerto Rican citizens are having to pay up to 15% long-term capital gains tax. This disparity between locals and non-locals has obviously now been the source of tension between the two groups. These tax breaks, which were meant to bring more jobs and investors into the region, are now being utilized by residents who are trying to get out of paying capital gains tax. Additionally, the influx of new wealthy residents is causing property costs to surge. Diaz Fournier of Luxury Collection Real Estate told CNBC that the increased demand has led to prices not seen before. "I've been tracking the markets for several years, and I was not expecting this," Fournier said. "You have properties in Dorado Beach that have been sold for more than $20 million.